before we have another session next week. Slightly different time though next week. I'll remind everyone of this in a little while once everyone is here, rather than telling a few of you and then others missing out on it. But this week, what we're going to be looking at is, well, how do you develop processes to grow within your own group? How do you develop your own sort of team? We talked about sort of teamwork and collaboration last week. And what we're going to look at this week is, well, how do you go about doing this? And then following on next week, we'll be bringing a little bit more in relating to, well, the reality of doing this, the successes that this has brought, the way that this has changed traders over summer markets, and what they've learned over those last few weeks and months. So let a few more people get involved. Good to see we certainly got a decent US contingent so far, and I recognize a couple of names from other workshops that I have done as well. So I'll let a few other people drop in. In the meantime, whilst I'm doing that, for those of you, if you are new, if this is the first time that you have joined this sort of number of sessions, rather than necessarily first time that you have joined us, hey Roy, click on the link, and what you can do is you can see the previous two, so the one from last week and the prior week, where me and Alex talked about the sort of development of the prop industry over the last few years, the development of, or the sort of decline in it, and then the regrowth of that. And as you see, the link's down there at the bottom, so elitetraderworkshop.com/performance. Right, we're starting to get a few more people popping up. I'll drop this back in the group, all of that side of things in a little while, or for those of you joining that a little bit later. So good to see a fair few people on. I'll bring Alex in. We'll get started. You join in, say hi, Alex. Here he is. There he is.
Hey, hi Richard, and
Right.
welcome everyone, and welcome people from Arizona, Canada, Khalid. Great to be here. Great to be in this penultimate session. It all really kicks off where we share a lot next week, as Richard mentioned. Next week, Thursday, 7 p.m. UK time. Hope to see you all. It'll be a longer workshop. Just really uncovering a lot of the things that we cover. We're also, when you sign up to the link, there is a Telegram channel. Sign up to that. You'll get myself and Richard just reporting from the floor over the next week, Monday, Tuesday, Wednesday, and the Thursday, and the Telegram channel shuts off. There's a lot of information we've shared there already. So hope to see you all there, and excited for today's workshop. I'm going to be more the spectator, chiming in occasionally, but really excited for how we've looked at evolving, what that new type of modern trader looks like. We've taken you on this journey of the screen base, when we went from pit to screen base, and now what does that future trader look like? What does he have to enable? What does he have to armor himself with in order to navigate complexity, navigate change, navigate himself? And so I'm looking forward to this workshop, and just be great. Those on the chat, just let us know where you're from. South Germany, what products you trade, and looking forward to this session with Richard. But again, join us for really the main event. There's been a 3 parts. Is the main event next week, Thursday, 7 p.m. UK time. The spaces are limited. It'll be a Zoom, a very Zoom intimate session, and there will be, I think, 150 places for the session there. So just make sure you arrive just 10 minutes early, just to guarantee your spot in the session for next week. Hi, Francois. I remember you from last time. I wonder if you are South Africa. Francois Fourie. Sounds like a very South African name. Okay, that's it. Richard, I hand it back over to you.
Okay, right. Let's get going. Right. Last time then, what we talked about was, I'll just get the slides up. Hope everyone can see slides. I believe everything is there. Last time we were talking about sort of leveraging group learning, and how one person moving into a new market develops this kind of, not necessarily rush, but broadening of ideas and development of new potential trade ideas that can then develop into a whole team leveraging up multiple different strategies, multiple different approaches to one new market. Looked at this particularly with gold last week. So like Alex said, click on the link. You can go and see the one from last week. And this then also led towards where we wrapped up last week was the sort of educational evolution, moving over time through the early 2000s, where really it was just down to you to kind of just work it out, have a go and see what you could do. And where the sort of big shift comes in education is the realization that actually the necessity is bringing traders together, creating these teams of people, because that's where you can leverage understanding. It's not just, say, me on my own testing an idea, trying to get that to work. And if it doesn't work, not knowing where to go with it or not seeing the blind spots. But as soon as I open it up to a team, explain this idea to Alex, and he says, well, this is how I see it. All of a sudden, both of us have got a new perspective. Both of us are growing. And so what we've then done at Axia is tried to take this and formalize this, make this into a more clear approach, a method of how exactly you're going to go about doing this. And this is something that constantly evolves. It's not something that we sort of sit on our laurels and go, oh yeah, that worked well in a basic form in 2013, the sort of embryonic stage of it that I talked about last week. And we did all right in 2017 in developing traders. We haven't just sat back and gone, right, well, that'll do then. We found a new way of doing things and this seems to be working. Alex, talk a little bit, or join me at the end as well, in talking about what you call an edge gap, and the sort of how do you push a trader from somebody who can earn a decent living, well into the six figures, to someone who can earn into the 7-8 figures. How do you continue to develop in that sense? And that's one of the things that we're really starting to sort of build on further and further in our own development. So how exactly do you go about this? How do you structure your own team, your own group, and how have we gone about it? So it's kind of giving you a little bit of a template of our methodology for group learning, and it comes in two parts. Basically, you have formal collaboration, which is something that you structure. It has a very clear sort of set of rules, if you will, as to how this is done. And then you have informal team growth. And this is something that has been going on for many years. But when you facilitate this in a certain way, when you get that informal growth to come in a more deliberate process, this then really accelerates performance rather than it being just purely informal. I'll talk about my early experiences of informal team growth, which certainly not what you would call the way to do things, I wouldn't suggest. So, formal collaboration. The sort of premise of this, or the reasoning behind formal collaboration, is about broadening awareness. It's about refining your own approaches, and it's about developing new perspectives. So, in terms of broadening awareness, this is where we bring in weekly workshops. We get traders to come and explain their thought process, how they traded certain events. We do this with weekly report cards. We report back from our traders' performance on the floor over the previous week, and also specific topical Discord groups. The purpose here is that having a clear sort of forum to place these ideas, for people to explain themselves, to explain their methodology in certain situations, broadens awareness. It's not about any one of us watching a workshop and going, all right, that's how they do it, I'll copy that. You can never copy what somebody else does, because by copying, what you're doing is you're taking what they've done in the past and now trying to apply somebody else's methodology from the past to the future. The other reason for doing these types of workshops is to try and refine approaches. And we do this in two ways. One is a workshop. So if you're the person conducting the workshop, and it's something that I really learned when I started on the more educational side of the business, is that if you can explain your own idea, I mentioned this in some of the earlier sessions as well, your understanding of that idea goes way up. The details, the specifics that matter are much, much better refined. And you can see the downside or the deficiencies in your own approach by doing that. We also run idea discussion sessions. So these are more sort of structured sessions on the floor and say, right, everyone get around 10, 15 minutes. And what this will do is this will then allow people to present an idea, even if only briefly. It's a clear presentation of idea and a challenge of this idea. And challenging is good. Don't see a challenge to your view or your idea as a bad thing. See a challenge to it as a way of testing your idea. If nobody can form a clear, cohesive reason why your idea is no good, then that is actually enhancing your conviction in an idea. It also removes biases. It's very easy as a human to jump onto the first idea you have. You see something that looks good and you think, yep, that's it. I'm going for it. And you become completely tunnel visioned onto that idea. By having these discussion sessions, you challenge that. And so that then refines your approach because you can then see the other ways that this can work out. And that then leads on to new perspectives. By working as a team, by having this sort of formal collaboration, a structure, a time when you do these types of things, a point when you are going to sit down and question ideas, this creates new perspectives. And so if you can do that, then this expands the whole group's mind, essentially. It also means that you get courage from other people's mistakes. If you can see how other people have failed, how other people have done something and it's not worked, you now have a new perspective on how they've dealt with that. I was talking to Alex about this a minute ago, about the kind of concept that you can gain a new perspective sometimes where you've taken a trade on, other people have taken a trade on, and you've all lost. And this isn't about going, oh no, it's not great, and we've all lost together. It's about being able to go, okay, well, if everybody else thought this was a good idea, chances are this was a good idea, and it's not worked this time. And so by having this perspective of how other people have dealt with that, how other people have grown in that situation, you gain your own resilience on it. It removes this kind of narrow thinking that people have that, their idea, it hasn't worked, so throw it out the window and move to something new. So that's the formal side of it. You then have an informal growth side as well. And this is about positive competition. It's about fresh thinking. It's about story bonding. I'll talk about story bonding in a minute. It's something that Alex did a workshop on yesterday with a a, a, a great psychologist who's very much about understanding human interaction through story and through narrative. His name's Angus Fletcher. It's a book that, in fact, I've got in front of me. Just there. Creative Thinking. It's a great book to read about, well, how do you grow through story and how do shared experiences improve your own performance? But first thing, positive competition. There is no harm within your group, within your team that you're creating, having positive competition, trying to always beat other people within the group. It's not a zero sum game. If I perform better than somebody else, they haven't underperformed. They don't lose because I've performed. They perhaps just haven't performed as well. So their job now is to get above. And it creates this ladder effect that everybody is constantly trying to beat somebody else. And that positive growth aspect is essentially the sort of logic behind it, or the sort of reasoning behind the concept of a growth mindset. It's about seeing something, seeing how somebody else does it, and being able to then see how you could do that better next time and continually grow.
And Richard, I think, sorry to interrupt there. I mean,
Go for it.
you spoke about it the week before or 2 weeks ago, just about that. But I mean, it's so palpable on the floor, and we'll be speaking about it again next week of how you can replicate this at home, and how you create it, as well, speaking from a floor perspective, but we've seen it. Sometimes the architecture of how we design our trading floors, how we organize, and sometimes it takes time. There's a few iterations, multiple areas, receiving the feedback from those areas. But when you place certain personnel next to each other, or someone who's just, a year, 2 years ahead of another individual, and then a young, up and coming trader is starting to push the boundaries of his consistency first, then scaling his consistency, because because first we try and find the consistency. That's why in our internal funding evaluation process, it's all built on consistency, because without consistency, you cannot scale your business. It's my fundamental belief that I believe in trading. All of our top traders were consistent before. They were making their $200 a day, consistent, and $300, $400. But what is fascinating is when there's a group and there's someone that's performing at a high level, then all of a sudden everyone else pushes and they push that person at the high level. The example you used of Demetris back with one of our other senior traders on our first floor, and how they pushed each other. I've been on the floor with €2, one of my very close best friends, 2 Euro stocks traders. These guys, this was back 12, 13 years ago. They were doing 20,000, 30,000, up to 70,000 contracts, or round trips a day. But the one had about a year's experience. A year's less experience than the other, and the younger trader that was pushing the envelope of just trading size, bigger days, so only having, when he had his first 1K day and his first 10K day, and then and just started scaling his business, and then how that pushed the other trader, because he was staying at one size, and then he said, well, why is this trader now who's got less experience, less experience than me, but then using that positive competition, then to have that feedback. And I've just seen it over and over, and it's such a critical element for growth for individual traders if they surround themselves upon that design of a team.
Yeah, agree. And I think the other aspect of that is that fresh thinking. One of the things, like you say, with changing the floors around by thinking about who interacts with who, is the idea that every opinion needs to be respected. It doesn't matter whether this is your first day. If you've got an idea, if you've got a structure that you're looking at, people are respected for sharing that idea. And it doesn't matter whether you've been in the business 10, 15 years. People will listen to the more junior traders in the same way that they will listen to the senior traders, because what this does is it creates a new perspective. And this is that informal side of things. It's not about, this has to be structured, but if a complete junior trader comes and speaks to one of the senior traders, we've created an environment where that is respected. It's a big change from the environment, certainly when I first started, where as a junior you were bottom of the pile, and you basically did not get spoken to until you were making enough money to gain respect. Whereas we create a different environment where the objective is to respect every idea, because this develops new ideas, new perspectives, challenges the norms. Because the senior traders they've had success, they've performed over time, but that doesn't mean that there aren't areas where they can continue to improve, and they could become better, and they could change the way that they see something. And the final thing as well is what I call sort of story bonding through shared experiences. This is something that I've certainly felt in my career, early on in my career. I've mentioned this to people in the past. One of the senior traders on our floor now, me and him are very close friends, and one of the experiences that I had early on in my career is I started to build a bit of money up, and built my account. I'm not to anything significant, sort of 15, 20,000, and had a trade that I felt was really high conviction trade. This was going to work, and it went wrong, and situation of market shuts and various other factors, it ended up costing me almost everything. And at which point, I felt that I couldn't stay in the game anymore, and I almost quit. And it was through having this shared experience of speaking to another trader who also had shared a tough period, who'd also experienced losses, and that shared experience creates resilience. Because one of the things that really resonated with me, and I still remember this day very, very clearly, of sitting there having a coffee in a different room and saying to him, I'm done with this. And he said, the thing is, you've got to this point to be able to lose that money by doing something right. It's not that you're a bad trader. There's a mistake, and you can learn from that. But also, what you were doing right is still going to work. Whereas my perspective in that moment was, I've blown it. Whatever I was doing right doesn't work anymore, and that's it. And he was dead right. And that was a real light bulb moment for me, that I was able to go, okay, accept this loss, deal with that, and you can move on, because you're now sharing this sort of experience, and that creates a great bond because you then have absolute trust in each other. We still discuss technicals, we still discuss how to trade data, all sorts of different things. You have absolute trust in people or in that other person. And that resilience that you build together, it enables you to deal with some of the tougher periods, some of the setbacks. It also maintains optimism. And optimism, is sometimes seen as a word that doesn't really relate to trading. But I talked about luck previously as well. Optimism is important, to look at an opportunity and go, do you know what? This could work. And believe in that. Whereas if you put yourself into a mindset whereby, oh, this doesn't work, I don't like this idea, it was bad, it didn't, I lost some money, I'm scrapping that. Without that shared experience and somebody being there essentially to support you, and you support each other within your group, within your team, that then allows you to maintain that optimism. This was still a good idea. And a similar type situation came up a few weeks later, and I was still able to execute on that because of the experience and support that I had from another trader, not because he was more experienced than me. He'd been in the job the same amount of time, but that shared sort of story of what happened and how we each sort of dealt with that situation was then what allowed you to then maintain optimism about your trade and about your skill set going forward. Now, a lot of what I've just talked about relates to a degree mindset, but also to a degree developing new ideas. And what I've not talked about here is the idea of trying to create statistical edge, as I would call it. Really, really high win rates. And some of you will have seen this before. A stat, from a group of our traders in London, their performance over the entirety of a year, and how win rate is under 50%. And the idea of this collaboration is that this allows that 50% win rate to be turned into significant performance. And the reason that this happens, and the reason that you can turn a 50% win rate into such a decent profit, is through what we call exceptionalism. And this is what you learn by leveraging up the discretionary side of human behavior. It's not about understanding the statistics of it. None of what I talked about there was about one person said this trade works and I back tested it and it's got a 75% win rate, so let's all trade this trade. It's about one person saying this is how I do it, and then another person saying, right, well, that now improves the way I do this. It doesn't even have to be the same trade, but it allows you to just see a slightly different variation of how you deal with things. And the other thing that humans do exceptionally well, and this is part of that story bonding idea, is that humans understand narrative. Humans don't need vast data sets to understand things. Humans understand things in a slightly different way. They understand through adaptive intelligence. Algos, computerized systems, understand things from the point of view of logic and data. Now, logic's not a bad thing, but it is limited in its ability to understand anything that doesn't necessarily fit with the standard logic. So the way humans perceive information is about seeing something that's different. They see a change, and rather than dismissing the change, they see this as an exception. They see this potentially as an opportunity. And so they can now adapt a strategy almost immediately. Not straight away, but you can see how your strategy could change. And as soon as you then see that that new idea you have has worked, you have that confirmed. So you now need 2 data points and you've developed a whole new strategy. A computer doesn't. Computers take vast data sets and create a normal expectation. Anything that falls outside of this, anything that's not normal, is dismissed because that doesn't fit within the rules. It doesn't fit within that data, or it's reverted to the mean. It's factored into the wider set of data and seen as an anomaly, the sort of tails on a bell curve, and so is then again sort of factored out of the equation. The only way that a computer or a system or an algo can see anything differently is they need a new large data set to be able to say, okay, well, this is normal now, rather than a human, which needs 2 points. This gives you a huge amount of edge. This is where you can leverage your positions up very, very quickly, because as a human, if you understand narrative, you see something different, you see a change, and rather than dismissing the change, they see this as an opportunity. And so they can now adapt a strategy almost immediately. And straight away you can act on it because you can see the implications of this going down the line. And this works in wider perspectives. The recent Ukraine crisis, or the Ukraine invasion. One of the ways that our traders had a great deal of edge there was that there hasn't been a situation like this for many years, where you have this sudden invasion, and there hasn't been a sort of vast data set of how do you trade these types of situations. And so the algos essentially switch off. The algos get out of the way, which gives you what I call liquidity edge. You can get in at the best prices because nobody else is competing for those, because all of the algos get out of the way because they see this as not normal and they don't have the data to deal with it. And this also plays out in a very short term. I'll give you an example of this.
Sorry, Richard, can I just
just
before we start, because I think I find this subject and this space so fascinating, especially after we spoke about that 2013, 2017, traders who were not able to evolve, not understanding how to evolve. Sometimes it was the fault of education, it was the fault of training, it was the fault of just being a one strategy pony because that's all you were taught. But seeing how humans excel just through antiquity for survival, almost a type of Darwinian evolution, is our ability to operate in highly ambiguous environments. And so when you get the global financial crisis, when you get George Soros pushing the Bank of England to the brink, when you get the 1970s oil embargo, when you get the European crisis, time and time again, you see discretionary traders outperforming on a magnitude of 10x to a normal month. And this is what Richard's discussing, our ability, and we're doing in our internal Blueprint 12-month coaching program. We're going to be having workshops on this hopefully in the early part of next year, of how you leverage our ability to think in this way and how do you actually employ it through what we'll be speaking about, especially next week. We're going to be sharing the actual architectural design, but this human element and how to scale the human, because it hasn't been tapped as far as it can really go. And this is what's so exciting if you create that learning ecosystem, again, which we'll be discussing in detail next week. But it excites me so much of what capacity we have. And so you have to embrace the complexity, embrace when things are changing, because I can tell you adapt to that much quicker than an algo HI machine learning systems.
Yeah, absolutely. And I've drawn a little kind of map of this. And one thing that we'll be doing next week is actually sharing the reality of executing this trade. So this is something I often talk to people about. If you can essentially draw the concept and explain the phases of a concept, when this happens for real, you know how to execute. You see this happening, right? There's my time. There's my chance to execute. And I'll be showing you an example of this next week of somebody actually executing on this type of concept and understanding what happens to algos, what happens to humans in terms of trading certain situations, and goes to beat this myth that humans cannot beat algos. Humans can beat algos. And the reason that humans can beat algos is because they understand what a change causes. And algos actually, I was talking to Alex about this before, about algos actually have an inbuilt fear. Because anything that's not normal, algos see this as a reason to get away from the situation in the same way that humans do. That if you encounter a situation that you're uncomfortable with, you will try and get away from that situation. That's inbuilt. But algos have this inbuilt as well, that as soon as data doesn't match what they understand, the algos generally will turn off because they don't know what to do with the situation, or they see this as a chance to then play that move back. And this is where they can get trapped. So take this as a little example. This is a range, break, and move. This would be something that would happen over a piece of news and generally happen very, very quickly. So you get a market trading in a little range. What you then get is this quick move out of range. So say this is a new piece of information that hits the market. The market will react very quickly to this. Now, I'm only using the one example of one side of algo trading. Some algos will react to the news, granted. But what you're going to get is you get this fast move out of the range. Humans immediately can see that data, relate the data to the current narrative, and know exactly why that's happened and whether this should generate a continuation move. So you're already seeing the next step. What algos see is a market that's been trading in a range, low volatility, not trading a great deal of distance, and it suddenly moves. The algos perceive this as outside of the normal, and so therefore the market should go back. So many algos are going to buy as the market drops because this isn't where it should be, and this is their mean reversion opportunity that they're looking for. What you then get is the bounce. Algos essentially have got this wrong. They're buying on the basis that the market has done something unusual, but they're wrong in doing this because the market isn't doing something unusual. It's doing something unusual compared to what it was doing, which is how an algo works. It works on the logic, on the data of what's just happened. And this isn't normal compared to what has happened. But there's a reason for this. And we understand that reason immediately. So when the algos bid the market back up, this is an opportunity to start to sell because you can understand now this is your chance to get into the trade. You can sell into all that liquidity that the algos give you. And then as the market drops, because overall, humans and traders who understand the situation will overweight the algos. They push the market back down. Now, the algos' fear sets in. This again is not normal for them. This shouldn't happen. And so their response immediately is now get out. And the great thing about an algo is that algos are emotionless. They won't sit there and go, but it might come back like human traders might. If you've bought this area here and people think, it might come back. The algos won't. The algos will go on the basis that you shouldn't go this far down on the trade. Get out, get out, get out. And that accelerates the drop further. And so if you can understand the limitations that algos have, you can understand how humans can beat algos. Algos can't beat you. They can beat you at certain things. They are quicker than you. They can interpret more data than you. Accept that. You're not playing that game. Your game is to understand narrative and to understand where your own human discretion can identify a change much faster than the amount of data required for an algo to understand that shift. I agree that it is speaking very broadly of algos. I do appreciate that. I would say it's a bold statement. I think you have to be convicted in your view. Appreciate not every algo is going to trade in that way. I accept that. But by understanding what it is that inputs to an algo's decision making is still to understand that there is limitations in what they can do. That I'm talking more about how you understand your own edge in comparison to an algo's edge. I am using the example here of a mean reverting algo, of course, but in understanding how that can be played and how that impacts the way that you can execute, I think still illustrates the point that algos are not infallible and they can very much be beaten by humans. So, like I said, humans don't profit from statistical edge. Humans' biggest advantage, of course, is leveraging adaptive intelligence. It's about being able to understand a situation for what the situation is now, how that has suddenly changed, and what exactly that means. That's where we have huge amount of edge. And this is what gets cultivated by having group workshops, by those informal discussions. I talked about informal discussions earlier. I said the early informal discussions that I had, I don't know if you found the same, Alex, early on in your career, was that essentially those discussions were people going to the pub after work. And that's not exactly the best place to cultivate new ideas. But that was the informal discussion and that was it. But when you take that and put this into an environment where actually it's informal, but it's encouraged and it's facilitated, and you bring in those people who don't want to go to the pub into the conversation, all of a sudden you're now also getting away from the confirmation bias that if you only take, say, the people who go to the pub, you only get the certain types of characters that like to do that. If you facilitate an environment where different characters come together, come and discuss, and this is one of the big advantages of things like Discord, that when you're online, everybody has a different background, a different characteristic, but you're invited into the group as a whole. And that sort of immediately gets over that boundary anyway and facilitates that sort of variation and widening of perspectives based on different types of personality. Well, there you go. There's a certain type of personality who would agree with me there, but not everybody does like that. And I think it, whilst good, you may well forget some of the ideas that you have. The one last thing that we want to talk about, and this is something that we will discuss a little bit more next week as well, is what we call the edge gap and the difference between traders who can perform and understanding where it is that your edge needs to improve and when it needs to improve. There you go. Got us out of the way. Early on in your career, so if you look at the chart on the left, I tried to illustrate what happens to new traders often in their careers. And a lot of this is down to early on in your career, a better understanding of technical skill set, a better combination of the tools that you use, and a deep understanding of the way that you trade can generate decent results and create this kind of exponential growth early on in your career. You can get quite a significant jump. But what often then happens is that over time, people's equity curve will stagnate and it will become reasonably flat. They'll struggle to consistently push 100,000 a year. Maybe they get 100,000, 200,000. So it's entirely doable by cultivating your edge from a technical perspective, improving on this sort of style that you have as a trader. But what we started to see, and where we're constantly developing and constantly bringing new ideas in, is, well, how do we take those senior traders that we've got to the point of 100,000, $250,000 a year, and they're doing well? How do you turn that into $1 million a year, 10 million a year? And that exponential growth is the same as at the beginning of your career. To jump up from 10,000 to 100,000 is 10x. To jump from 100,000 to millions, 10x is 100x to get to 10 million. So how do you go about doing this? And this is about understanding that edge gap, what you need to improve as a trader, what you need to change, and how you're going to go about doing this. And one of the things that's really crucial here is to see trading. And this is, going into how do you develop your career going forward, is to see trading as a business. And the profits that you've made, and you've got up to 100,000, 200,000, that's profit that you can reinvest in your business, reinvest in yourself to make yourself a better trader. Be that, I've seen this from numerous traders, putting money aside and saying, right, I'm going to accept 20,000 of loss here to try and learn a new market. And that's one way that you can do it. You can go into investing in different coaches and things like that. And so what my point here being is that to understand the progression of your career, the investment in your career comes in different phases, rather than feeling that you need a psychology coach for every aspect of your trade and all of those side of things. Invest as time goes by. In the early stages of your career, you can invest in the technical side of things. And this is what can generate a reasonable career very, very quickly. I don't know if you got a little bit of strategy.
Just what Rich is mentioning there, the incredible, the most challenging part in the beginning of the career is first survival, whilst you're developing skill set, whilst you starting understanding yourself and how you interface with the market, how your skills interface with the market, how you generate your own internal feedback loops, the ecosystem that we'll be speaking about next week Thursday, how you can go about designing it so you have accelerated learning, accelerated development, what that looks like. And once you get past the survival place, then get into the consistency. That's the next, and that's kind of that rites of passage to get to that, making that 100, 200, $300,000 year. But then how do you go, as Richard mentioned, 2 million to the 8-figure mark, which it starts becoming that minority. But that what you've seen in, for example, sport, such as tennis, and I'll use tennis as an example, where the likes of your Federer and Nadal, Djokovic have stayed at the top of the game for such a prolonged period because they've been able to design an edge gap. Once they had the talent, they worked hard in the beginning of their careers, and then the ones that were able to separate themselves, and I'm using a broad brush stroke over here, but the ones that are able to separate themselves are actually the ones who also know how to invest in themselves. And so what we're talking about, so how Djokovic surrounds himself with a dietitian, a gluten-free, how he goes to the Buddhist center before Wimbledon to speak to one monk and meditate. So when he's under the pressure, under the cosh on a match point against Federer, and how he turns that all around because he's able to, to tap into a zone or a flow state that many other tennis players haven't been able to do because he's invested himself in that area of flow. Or whether it's a stretch and fitness coach, so he has the legs to last 5 hours. And what we're seeing amongst our senior and our elite traders who are trying to create this edge gap, and why the experience can stay at the top for longer periods of time than in the past, because they have a technical coach, they have a performance coach, they have a clinical psychologist. And those elements are where you start leverage. Why a trader goes from 1 to 10x. There are the black swans who just do it, but the ones that we are seeing doing it now on our floor are a function of how they're investing in their ecosystem around them. And so just something, for you, because, I hope everyone who's on the stream today, I imagine, is the first goal is to be consistently profitable. But, when you get to that level and you've, invested in your growth and your development, what do you do to 5x, 10x? And that is really the skill of how you surround yourself to be that top performing, because that's what trading is becoming. Our traders, our new office that we're opening next year in Cyprus, is a performance center. So where our traders during midday, if they're feeling slouchy, down, they can jump into the ice bath. They can reset themselves. If their minds are busy, go into the flotation tank for some just completely switch off. So their ability to reset, because there's also an edge, is your ability after taking a loss, the ability to reset and come back quick, because that next trade that you have edge in is there. And if you have created the attritional warfare within yourself, well, then you're not really giving yourself edge to take that. And origin code, just with regards to your statement on algos, I think the reason myself and Richard, we really appreciate that your comment. The reason we are going so hard, and I've surrounded myself, recently with guys in neuroscience, guys who worked on AI projects, talking like AI in the American defense, and is because there was such a big, what we just explained a couple of weeks ago, there was such a big excuse from discretionary individual traders of their performance was a lack of opportunity in the marketplace because the machines were taking over. And we just wanted to debunk that myth that just became so palpable and so powerful. And so we've done all our research on, well, how do you actually scale human intelligence? How do you scale team intelligence? And this is what next week, Thursday's workshops, all about. I'm going to be speaking about, I don't know if I'm able to, I'm going to be speaking about this very little architecture. It's one of my rough sketches, but it's very powerful on how we actually design our learning infrastructure, how we extend trading edge within the team, how we facilitate that, and how you can facilitate that in armoring yourself if you are trading. I know NX line on the chat here speaks about that's what he's lacking in team environment. So how can we enable it? Because we do have a digital revolution. in the sense that there is technologies in place now that you can, replicate, whether you're sitting at home side, but how do you arm? And that next powerful remote home trader is the trader who knows how to organize his ecosystem from home in order for him to excel at the same level as our traders on a physical floor, whether it's in London, Poland, or our training floor in Poland, in Cyprus next year. So I just wanted to share. But again, if you join us next week, Rich, I don't know if you had a few more things to say. I didn't.
No, that was around about the point that I was going to wrap it up. I wanted to just wrap it up there. And the thing that I want to sort of let everybody know is that next week we are going to be doing a slightly longer session. We are going to be explaining some of these things in more detail with examples of the reality of how do these things play out? How do you trade against the algos? How do you use the team learning perspective to improve younger traders? How have people navigated summer markets? So that's what we're going to be discussing next week in quite some detail. So hopefully that will answer a fair few other questions that people are wondering about and illustrate some of these points out a little bit further.
Yeah, and just to reiterate, we do have limited space for next week. It's going to be a jam-packed session with myself, Richard. We have another guest, and so it's going to be incredibly powerful learning. We probably won't be doing another live workshop like this for a while. So if you can make it next week, Thursday, 7:00, I'm not sure if there will be a replay. It could just be a live session. It'll approximately be about 2 hours, but it's a deep learning workshop. So hope to see you there. I'm happy to answer one or two questions. I see by Ivan Valentin. One question: let's say you have a playbook of strategies that work well. Why isn't it enough to incrementally slow the size according with your own psychology and stress levels? Absolutely. Ivan, that you can approach that piecemeal incremental growth, but it depends when you on your own versus those that it's just kind of that just that identity, that DNA within humans, that almost poison FOMO that is good and bad in humans, and if you know how to leverage it well, and those who you are surrounded by, knowing what's possible. I mean, traders, when our first trader made his first 100K, then we just had a whole group of other traders just all of a sudden start making 100K, because it stresses, it creates positive stress within your own system. It's saying, well, why am I hanging around when I can push limits because there's someone that I can just see across the room over here, or someone just sitting across me that is achieving it. He's no different to me. I prepped with him. He's no different on his prep. His ability to understand these conditions, well, there's just something that I'm deficient, and that identity, the ability to plug into an ecosystem and an organism, these kind of self-regulating team organisms just helps stress your own system, and we want to stress our system because that's what helps for more accelerated growth. Those who come on the floor and are more siloed, stick to themselves, want to grow in their own accord, they take so much longer to become profitable than our traders who stress themselves around the team. So hope to see you all next week. We'll just ensure the link, elitetraderworkshop.com/performance. Sign up to the Telegram group. It'll only be available for 1 more week, but you'll get some views and things what are happening on the floor. We've had an incredible, ECB yesterday was a highly skilled trading session. We've seen the evolution of the central bank, the inflation theme. There's no more exciting in my almost 20 years in prop futures trading in London. This is probably now becoming the most exciting session. We saw a drought from 2013 to 2017. Now, it doesn't mean that there's a lot of opportunity. If you don't have the skill set to harvest the opportunity, it's not so. So how are we needing to accelerate skill sets within the team, as what we'll be sharing with next week. So sign up for elitetraderworkshop.com/performance, and I'll see all of you next week. And I think Richard's got some closing.
What I'd actually done is to illustrate Ivan's point as well, to answer his question from my perspective, is the idea of incrementing size based on your own stress and psychology is great, assuming that your playbook works all the time. The problem is, if you continually change your size based on psychology, what you're not doing is changing your size based on situation. So you can have something that works in your playbook in a certain type of environment. But if it doesn't work in all environments, and you then reduce your size because psychologically you're not feeling great, you may well be actually reducing your capacity to earn at the point where this is the most ripe for earning, yet then limiting yourself going forward when this strategy stops working. So this is something that, perhaps a little bit of a hint into next week that I'll be sharing with you, a little bit more explanation of this. But the point being here that your way of trading is not related to your psychological perspective at any one point in time. It relates to the success of a trade, relates to the situation that you're in. And so you can't then just slowly increment size up, just purely based on your own psychology. You have to increment size up based on the situation, which again links back to that concept of human understanding of narrative and story rather than consistent performance in a certain situation.
And I just wanted to add on that. I mean, it's so great you brought that up. And, it's always stimulated through a question, like an idea is, next week we'll be showing some equity curves of our junior traders. And what you'll find most interesting is when we scale our traders or when they're at at their most negative P&L. And there's a reason behind that. Because I won't reveal it. Just wait for next week, Thursday. We don't want to give away too much extra, but we'll be covering it. Francois and Costa will answer those questions next week, Thursday. We'll be speaking about the difference between the two. So come for that next week, Francois. Praat je Afrikaans, and so great to see next week, and I look forward to people coming to our penultimate, our final session on Thursday next week, 7 p.m. UK time.
See you all there, guys.
Bye bye.
Yeah.